We just had the greatest 50-day rally in the history of the S&P 500, while unemployment rates are at record high, and unless people forgot, we're still in a pandemic mode. Well, I give you 5 reasons why investors are worried that the market might crash again. Let's go. Hello everyone, welcome back to the Finance Kit. As always, my name is Dion and I'm here to push your financial mindset towards a better reality. In this video, we'll do a quick stock market overview and why some investors think that we may see another crash or pullback very soon. And by the way, for those of you that are part of this community and you have subscribed already, welcome back and thank you very much. And if this is your first time and you haven't subscribed yet, what are you waiting for? Go ahead and hit that subscribe button right away. It is free and I will bring you personal finance tips and investing tips in the future. Smash that like button as well. So let's get straight to it. I will start by showing you 3 charts on the screen real quick. From top to bottom, you see Dow Jones Industrial Average, the S&P 500, and the NASDAQ charts for the last 12 months. Those look very similar, don't you think? Yeah, looks like a V-shaped recovery overall, but don't forget that it could easily turn into a W in no time, if you know what I mean. Now, this video is not about trying to predict where the market will be in a few months, but rather, I would like to bring to your attention some of the concerns that major investors have that actually make a lot of sense. The S&P 500 has gone on a 50-day historic rally. Dow Jones and NASDAQ almost at all-time highs again, while at the same time, we're in pandemic mode. Unemployment rates are record high, and company earnings are not so good looking for the next quarter. According to the second quarter 2020 CNBC Global CFO Council survey, the CFOs of major corporations around the world actually believe that we will see another retest on the Dow Jones around 19,000 before we see a record high above 29. And quite honestly, that makes sense considering the circumstances. So, what could take the market down again? Well, first and foremost would be a second wave of illness. If you have paid attention recently to the coronavirus numbers after the slow reopening, we are seeing new spikes. People are ignoring the health recommendations, and this could become a problem again. Regardless of where you stand, the current lack of vaccine means that there is at least some chance that we can be hit with a second wave of illness. As many countries are beginning to lift restrictions and reopen businesses and public spaces, this might happen sooner rather than later. A potential second wave could cause another shelter-at-home orders, which could cause even more uncertainty in the markets. Another reason we need to keep in mind is the irreversible damage that has been done to small and medium-sized businesses. Yes, the government did provide some help with small business loans and the PPP program, but despite that, many small businesses are struggling to keep afloat, and many others will never reopen, unfortunately. This will cause the unemployment rates to continue to be at very high levels, at least for a while. If you're out there trading in the markets in the last month or so, I'm sure you are able to make some nice gains. The rally we're seeing is very promising, but we need to account for the circumstances that we're in. By the way, hit that like button and share that video. I would really appreciate it. More people will be able to see it that way. Now, next on the list is mortgage defaults. Yes, there are a lot of Americans that will not be able to afford their housing in the current economic state. In addition, we know that because of the pandemic, foreclosures and evictions were put on hold, while at the same time, many lenders have been making allowances for late payments. But no bank can afford to keep delaying its income forever. Combined with the unemployment rate and people not being able to work and generate steady income, it won't be long before mortgage and lending defaults deliver another hit to the stock market. We have seen the stock market pull back for a lot less than the situation we're in right now. It is hard to imagine, personally at least for me, that while the world is still focused on recovering, the stock market will just continue to rise. Which brings me to the next reason why investors believe we will see another downturn, and that is the fear of uncertainty and looming recession. It's important to keep in mind that often overlooked influences like panic and fear can fuel an economic downturn just as effectively as any other factor. Uncertainty leads to erratic decisions and inaction, which can cause economic damage. In terms of how this crisis has affected the global economy, most people would agree that things will have to get worse before they can start getting better, right? Let me know what you think down in the comments about all this so far. Now, with all that said, what is expected to happen next by many investors and financial advisors is that companies will miss their earnings, and not just miss them. It will be a record lows. If you have paid attention when those are announced, it moves the stock quite a bit. S&P 500 company earnings for the first quarter this year are expected to be down about 14% from a year ago. The worst performance since the second quarter of 2009. Forecasts for the second quarter are even worse, with earnings projected to decline 41%, according to FactSet, which would be the biggest drop since the first quarter of 2009. Starbucks, just for an example, just announced that they will most likely miss their earnings by $3 billion. Those are scary projections, but they're also very possible. After all the world was shut down, so to speak, for a while, how can those companies meet their sales and earnings expectations? This alone could cause a choppy few months in the stock markets. Overall, the economic outlook from chief financial officers and investment advisors has worsened in the recent months as they have gained a clear picture of the damage businesses will sustain as a result of the COVID-19 pandemic. So it is time to take a look at your investments, and especially if you have made some nice returns in the last few months, maybe consider taking some money out of the markets. Don't forget, we can never time the market to perfection. And I'm not a financial advisor by any means, but this market seems overvalued now more than it was even before the pandemic. So stay positive and master your finances. And I have been saying this in every single video. So with all that said, thank you for watching. Make sure to destroy that like button. Subscribe if you haven't already. Not sure what you're waiting for. So I will continue to bring you valuable content you don't want to miss. Working around the clock for you and sharing my experiences as soon as physically possible. Thank you if you have already subscribed to my channel. Again, don't forget to hit that like and the share button. I hope this video was informative and provided some value to you. Down in the description, you will find other helpful links to other helpful videos. Thank you for pushing your financial mindset towards a better reality. Until next time, stay positive, master your finances, and take a good care of yourself and those around you.